Meanwhile, as expected, the U.S. Federal Reserve left the rates unchanged for the fifth term in a row. Well, more importantly, the Fed predicts 3 rate cuts by the end of this year. Here's what Fed Chair Jerome Powell had to say. Take a listen.
Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance.
Fed Chair Jerome Powell has indicated the possibility of 3 rate cuts this year. Powell's speech, however, gives greater insights into what the Fed thinks about the U.S. economy. 2 things are clear. Inflation is slowly easing in the U.S. and solid economic growth will continue. A key measure of inflation is predicted to keep falling to end the year at 2.6%. The economy is expected to grow 2.1% this year, way above the 1.4% growth seen last year. At the same time, the unemployment rate is only expected to hit 4% by the end of 2024. The Fed still foresees a soft landing to ensure that growth continues as inflation is brought under control. But a soft landing will depend on the path that inflation takes in the coming few weeks.